Yo, what's up? Speaking here is Lisba Mutupi, and I thank you so much for actually tuning in onto my YouTube channel. On today's video, we're actually going to be speaking about how to thrill stop winning trades. And please do make sure to just check out the free training that I have for you guys. Go in the link in the description box to make sure that you get that. Okay, so I want us to actually talk about what I will be covering on today's video, and it actually does mean a lot for me to sit down here and have you guys watch this video, and at the same time press the subscribe button as long as you're finding value, and like these videos if they're showing you something that you never saw before. So basically on today's video we are going to be speaking about how to manage winning trades, like how to actually thrill stop. And one thing that I want us to cover first is that I'm going to be explaining what the stop loss is and the take profit. I'm going to be explaining what the thrill stop is, what's the method of a thrill stop, and I'm going to be showing you guys how to actually apply these methods onto the charts, because I'll be showing you guys charts too, because I also took a trade that I had to thrill stop during this week, and I want to actually show you guys how I actually went with that from the actual beginning up until like where it's at now. And then most importantly, I want to just give you guys a few tips, and at the very end, one thing that I want to be doing is that I want to talk about the advantages of using these thrill stop methods so that you can actually apply this onto your own trading career or your trading journey, just so you can be able to achieve consistent results. Okay, so let us start off first by explaining what a stop loss is, because I see a lot of people commenting below, like asking me questions like, can you please tell me how do you apply a stop loss, what does it mean, or how do you actually put that into like the markets, and like what's the whole like how do you actually use this thing named a stop loss. So basically what a stop loss is would be like, let's say if you are buying a market price, now let's say you are buying at 11 rands or $11, 11 something, you're buying that thing at that specific price. So basically buying it means that you're saying that if it goes upwards you have to make profits, and if it goes downwards you will be making losses. But now a stop loss, instead you'd be putting in any price below where you are buying, just so in order, so when you actually when the price goes against you, you don't lose too much, you don't lose money that you're not even able to lose, you understand? So even you don't get to lose your whole account, you only lose a specific amount of the trade that you actually went in. So basically you can see it this way, like you can either lose money compared to your percentage wise, like let's say if you've got $1,000 you can lose 1% of that, which would be $10, or you can lose money according to, let's say, money wise, like capital wise or dollar wise. So like that would be like, let's say when you enter a trade you'd be like, I don't want to lose more than $5, so you put your stop loss at, like, let's say a price that will allow you, like when the trade goes against you to that point, to that price, it will actually take you out with that money that you're able to lose. And take profit, just to explain a bit about take profit. So remember, if you guys actually want me to do a video speaking like the whole details about stop losses and take profits, let me know, and then I'll do a video about that, because now I'm not actually doing about take profit and stop loss, I'm doing about thrill stopping. So I actually wanted to explain this part first so you understand, just so I can get to the thrill stopping part. So take profits basically would mean that, let's say you bought that specific market at 11 rands or $11, whatever, but as long as the market goes upwards, since you bought, it means when it goes upwards you're gonna make more profits. So yes, the more it goes, the more profits you make. But once it gets to a specific level, obviously market is gonna retest, or maybe it's gonna like it's gonna retrace and then go back down. So basically what you're saying is that you want, when it gets to this level, to actually take profits when it gets there. So when it gets to that specific level, you want to take your profits, and then you are fully satisfied with those profits. So I want us to actually focus a bit more on that, like the stop losses and also the take profit side of things. So let us now start to speak about thrill stop. What actually is thrill stop? How do you actually apply thrill stop? How do you use this whole method named the thrill stop method? So basically with the thrill stop method, like to look at it now, I'm trying to make things as simple as possible, and just so you are able to understand at the same time, because someone out there haven't heard of the word thrill stop. Like even in my premium group, I'm a member during this week, he joined, I think it was like last week, and then one of the members like shown us that they logged some of their profits, and then the member was like, how do you guys even get to put those stop losses, like how you got them? So most people don't know about it. So basically, like thrill stopping, like, to make things simple, thrill stop is basically like, it's when you're putting stop loss into profits. So like let's say now you're floating at $50, you went long, you bought a specific market, you bought a trade, now you're floating, you're making profits now $50. So what that would mean is that, like, since you're floating $50 and you didn't take profits yet, it's still floating, it's still the money that's floating onto your equity, not in your balance. So basically, to look at things, what you're saying would be like, if you want to log specific profits, so you want to go out with maybe $20 or $30 or even $25, so you instead move your stop loss from where it was. If you had one, you have to have one, you move your stop loss from that number to a price that will allow you, like at least a price that when it does go against you, you'd be able to just go out with still profits at the end of the day. So basically you lock in profits, and you lock in profits that you're comfortable with. So now you're floating $50, and then the price is like what, up by 50 pips. Let's try and make it things simple. Like the price is up by 50 pips, and then you're saying that, okay, no, I'm locking 25 pips. That means if the trade goes 25 pips downwards, you are going to be taken out, and you're going to go out with $25. And then if it continues to go upwards, you won't make more because you are out of the trade. If it goes more downwards, you won't lose more because you are out of the trade with profits. So one thing that I want us to actually do is that I want us to jump onto the charts, because truly speaking, we experienced such a trade in the group this week. So I want us to show you guys that. Also, I think I shared this trade 2 days ago on the live session that I posted, and then it was like Euro GBP. So it went downwards, and then after it went downwards, it was giving me maximum profits. I went in, it was exciting and stuff, and I noticed that no, if I just get too excited and hold these profits, what if now the price goes back to pushing upwards, and then it takes me out with a negative? Imagine going from holding positive $500 all the way to a negative amount. It's gonna be a painful move. So you have to at least go out with something. If you're holding positive $500, at least when the trade goes against you, go out with a positive $300. Do you understand? Even if the market just goes crazy and then it shoots, like it spikes and does all these things, still you should be able to take profits back home. So let us jump onto the screen, and then I want to show you guys the trade, how we capitalize it. I want to show you guys how we actually saw the trade that we saw, because it's a trade that I posted a few days ago on this channel, this exact channel. So one thing that I want to do now is that I want to show you guys how we were able to apply the trail stop method in our advantage. We're looking at Euro GBP here, and it's one of the trades that I actually shared out with you a few days ago, because I remember it's that live session that I posted a few days ago, if you did take it. So now let us take a quick look at this. You can simply see that this is how I had it. I took myself beautifully here, and my stop loss was obviously here, went all the way to the downside. So you can even see I sent it out to the Signal members here. A lot of people were able to just capitalize from it. I've got members. I don't know if I'll just try to maybe show you guys a few results from it, put it up somewhere here. But let me just show you guys what I actually did when I say I trail stopped this. So basically, just take a quick look at this. So after taking my entry somewhere here, the trade started to just play around, and then it pushed downwards. So once it did push downwards, one thing that I done is that I moved the stop loss. As you can see, I had a 26 pip stop loss. I moved this stop loss to all the way down to the entry price, because it was not at the entry price. I removed the risk. So basically, this trade was going to hit me $50. Because I moved the stop loss to the entry price, I won't be, even if it goes against me, I won't lose $50. I'm just going to lose $0. So as you can see, it started giving me profits, started going downwards, then came back upwards. So as you can see, this was a breakout, and it broke out beautifully here. Then it came out to retest somewhere here. I saw this engulfing candle, so I was like, okay, no, I think it's safe for me to trail this stop. So basically what this could means is that right here is where I moved my stop loss. So I moved my stop loss from now being at the entry price all the way to here, believing that now it's going to go down and then go all the way down to hit profits. So I moved my stop loss to here. And then, as you can see, price pushed downwards. I was excited. I was making more profits now. Then it started pushing upwards. I don't know what happened. And then pushed all the way upwards somewhere here. It took me out. So this is where it hit my stop loss. But someone would be like, hey, Alice, wait, hit your stop loss. It means that you actually lost money. No, I didn't lose money. I made this profit because I sold here. And once it was in profits, I put my stop loss here. So actually, yes, somewhere around there, it took me out, hit my stop loss. And let me just show you guys real proof here that it's a trade that I experienced. Okay, there we go. Just to show you guys, okay, you can see here, I sold it here, went in on my dollar account with this lot size, and this is where I had my stop loss. And yeah, and then I told my members to move Euro GBP stop loss to 0. This price, which is right here. So it means that now whatever that happens with the markets, this profits of mine are guaranteed. I'm making these profits, like whatever that happens, whether it shoots downwards, I'm gonna make more, obviously. But if it goes upwards, like what happened here, if it goes upwards, I still get to log all these profits. I don't get to lose money. Like now, imagine if, let's say, I was a person that was like, no, let me hold for more profits. I'm greedy, let me hold for more profits. It will mean that when price starts to push upwards, now I was going to go from, because here I was holding $500, I was going to go from holding $500 to losing $50, on which that was going to suck. It was going to be painful. Going from holding $500 to losing money at the end is not really a power move. You can't really be consistent with that. But I went from holding $500 to still being able to go home with more than $250, on which it's amazing that this trail stop method is a method that can help out a lot of you guys if only you are able to use it to your advantage. Okay, so basically I want us now to talk about the advantage of using this trail stop method. So you can use it in different ways. Like, you can use it to either break even. There's a method that we call break even method. Like this one here, it works in a way whereby once the trade goes into profits, like once it goes into profits any amount, what you do is that instead you move your stop loss to break even, like to the entrance price, the entry price where you entered that market. So when it does go against you, you are still you're not losing any money at all. Like let's say if you are now, your stop loss was going to hit you $10, and then now the trade goes into profits, and now maybe you're making $2 or $3 or $5. But what the break even method would be is that you take your stop loss from that $10 all the way to the entry price. So when it does go back upwards, like let's say if you sold and then it goes back upwards, what you'll do is that you'll instead go out with zero. Like even if it shoots back upwards massively, you'll just get to lose zero of the money, because that's where you locked your profits at. So you need to look at this. But the one thing that I wanted to say a bit more, because I got confused while thinking of it, I wanted to speak about the part that, like, this break-even method, there's a lot of factors that come with it. Like there's types whereby for you to move stops to break even, the trade should at least be in profits of 1%, or there's types whereby at least the candle should close impulsively away from the entry price, just so you can give it enough room to breathe. That's one thing you need to do. So using the trail stop method as your advantage would be you just making sure that, because I remember I once learned that once a trade goes blue, it should never go red. So I want us to actually focus on that. Once your trades go blue, because I know you, the person that's watching this, there's times whereby a trade can go blue, and then let's say you're making $100, and then the next morning when you wake up, you're now in the negatives, or your account blue. That's painful. Going from making $100 to losing money, that's not the way it should be. That's not how you can be consistent. Once your trade go blue, once you start making money, you should be able to keep that money and be able to withdraw it at the end. So in that way, what you do is that you use this trail stop method to, when you're making $100, you can either decide that, okay, no, you're gonna take 50% of those profits, and then you're gonna lock them up, just so if the trade goes against you, you can still be able to go out with 50% of the profits that you had. Or because most people, just because you have money floating doesn't mean that you closed that profit, doesn't mean that it came to your trading balance. It doesn't mean that. But because you closed it, because it went out with that, you closed daily profits or maybe weekly profits, that means something. So you need to focus a bit more on that. So what you can do as a person, simple, you can try out this week. Take a trade, place it, try to hold it. You can even go with a small lot size if you're not a person that can hold. Once it goes 50 pips into profit, what you can do is that you can start moving your stop loss into profits. So I like to go with the method that I share with my premium members. I'm not going to be a bit more detailed with it, but I go with the market. Once it just impulses, then it starts to correct. I'll wait for that correction. It's a continuation pattern. When it goes downwards, I'll move, maybe scale in, and then I'll move my stop loss to where I would put the second position, the scale in stop loss at, and then just so that, that's how I actually do things. That's how I actually use this trail stop method. That's why it has helped me be able to be consistent, even though trades were going against me in the longer run. But because of I was able to still go out with profits. That's one of the most important things. So one thing that I also wanted to remind you about is that it's very important of you to take advantage of the free training that I have. There's a link in the description box, because this free training, it's designed, it's like 5 videos detailed. I speak about the introduction of forex trading. I speak about what else? I speak about the currency characteristics, understanding how GBP works, understanding how Euro USD works, these currencies. I speak about also like a detailed strategy that you can apply into the markets, just so you'll be able to just take advantage of it. It's a free training that I have. You don't have to pay anything. That's just how it is. And I'm just doing this to just show you guys that I appreciate you guys a lot. Maybe you'd get a lot of value from it. It will help you out somehow. But also do make sure to just hit the subscribe button. It does help me out a lot. It also helps out more people out there to be able to find me, because they're seeing that, okay, this person has a few more subscribers, so it means that this person is trustable, he's trustworthy, so we are willing to listen to him, because a lot of people currently, it's like what, 22,000 people are listening to what I have to say. So it means a lot that you do press the subscribe button. At the same time, I do have a lot of videos here. I speak about Nasdaq, speak about different currencies. As you can see today, I'm speaking about Euro, GBP, speak about what I'm comfortable with. So if you do want to check out more, just scroll through my channel, and then I do believe that you'll find something that is gonna definitely help you out a lot. But it's your boy Liswa Mutupi. Thank you so much for watching this video till this very end.